Okay, Tesla shareholders, is the sky falling for this stock?
No, 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 no.
I would argue no, but what I want to do here is break down that latest earnings report. So when that report came out, the share price dropped by 13%. So what I want to do is break down the negatives and the positives and kind of give you an overall summary of where this stock is going in the future. Okay, so first things first, let's jump into Tykr. This is where I always start. Tesla is still on sale. That's green. That's looking really good. The score is 83 out of 100. That's a really high score. The higher the score, the stronger the overall financials. That's outstanding. And the margin of safety you can see is 55%. Share price is 212 and fair value is 372. The fair value is that upside potential where this stock can go. So the numbers still look really good overall, but let's take a closer look at that earnings calendar. So the main reason why the share price decline was the EPS miss of about 9%. I've talked about this before. The number one metric that moves share prices up and down is that EPS. Essentially, EPS is the profitability of a company. You have your estimate and then you have reported. And what large institutions want to see is companies beating those estimates. If they're consistently beating the estimates and that EPS is increasing quarter over quarter, in other words, the company is becoming more profitable quarter over quarter, that's what increases confidence for large institutions, which causes them to buy more shares. So if you look closely, sure, they had a miss here, but in history, you can see we're going back to July of 2023. They beat by 10%. Then you can see here they pretty much matched expectations at 0, but then it was 5% before that, then 6%, 26%, 42%, 7%, 16%. And we actually have to go back to January 26th of 2021. They had a miss of 10% there. So these events do happen. It doesn't mean we should just freak out and sell all of our shares. Now, aside from that EPS, there's another factor that caused the share price to go down, and that was the tone of Elon Musk.
You have derailed. Shut up, Richard.
I would say this. Elon is dealing with a lot of different businesses, but a few things in his personal life, and it's like been pretty normal, and other times he's been a little frustrated. It is what it is. Going back 5 years, I was listening to actually an audio recording of him having a little bit of contention with some of the analysts.
You want to punch me too, Brennan? You guys both look like you might want to hit me in the face. Why don't you punch me in the face? Punch me!
And I know people don't love that. Share price will maybe decline over a day or two, but then guess what happens? It corrects. So big deal if he was having an off day. I really don't care. In this case, I'm paying more attention to some of the numbers, but more importantly, the business model. I'll get to that. So let's dive right into kind of the negatives here with the business. And in one, it can be perceived as negative up front, but it's really the long play, and that's the reduction of the car prices. So the Tesla 3 has now been reduced to about $38,000, well, about $39,000 US. That's about $1,000 less than it was in the past. And if you're interested, you can use tax credits and you can actually reduce the price to about, I was looking up some of the data here, about $32,000 in Colorado and about $31,000 in Illinois. So depending on where you live in the states, you can get some tax credits. And it puts it on par with other vehicles out there. These are gas vehicles, but these are some of the top selling sedans in the market. This includes the Honda Accord, which is about $27,000. The Toyota Camry, which is $26,000. Nissan Altima, which is about $26,000. And the Ford Fusion, which is about $23,000. Now, these prices I mentioned, these are like the starting prices. Of course, if you want more bells and whistles, the price goes up. But the summary is the Tesla 3 is really in that range to sell higher volume. Yes, we're seeing a reduction in the profit per unit or per vehicle, but it's the long-term play to produce more vehicles and therefore grow the business thereafter. Now here's a look at some of the other vehicles and their reduction in prices. So the Tesla Y has now been reduced to about $48,000. That's about a $2,000 reduction. Then you have the Tesla S, which is now $76,000, which is about $3,000 less. And then you have the Tesla X, which is now $81,000. And that is reduced by about $8,500. So solid reduction there. I look at this as a smart play. I know this is perceived as negative in the short term, less profit per vehicle, but Tesla's really gearing up for mass production. They want to sell more vehicles and therefore increase revenue. And of course, they can increase some profits if they optimize it correctly. On that note, as far as expansion, there was the talks of the new Gigafactory, which will be located in Mexico. Originally, I was looking at some articles in the past that was originally targeted to allow production or start production in 2025, but that's now looking like 2026 or maybe even 2027. Okay, here's a closer look at their earnings deck. So I just want to drill into two numbers here. This is at the volume of units. If we look at the quarterly, we can see that they had a nice track record looking like from Q2 of 2022 all the way up to Q2 2023. Nice consistent increase, but then you look at the recent quarter, that decline, that can cause a little bit of a negative reaction from investors as well. But if you go to the next page here, this is the trailing 12 month year over year looking really consistent. That's what we want to see. So that leads us right into the positives here with that earnings report. Starting off with the energy division, not the vehicles, but they have other products that Tesla sells, and their energy division grew their revenues by about 90%, which is awesome. They also announced the Cybertruck could start deliveries on November 30th. Price target could be about $39,000, and I'm seeing various prices there. Some people said could start at $39,000, most likely over 40. We'll see, but I would see it probably falling in that range between like 40 and 60 is my guess. It's a truck, but again, we'll see what happens. Now, this is something I do have to point out with Tesla. Wasn't really heavily discussed on the call, but this is the utility play. This is a smart business play. When you create a product that other businesses use, especially competitors, that's a great place to be. And that's exactly what Tesla has done with those charging stations. So this was announced in May. There are 17 other manufacturers of electric vehicles that will be using those charging stations. Those manufacturers include Ford, GM, Rivian, Volvo, Polestar, Mercedes, Nissan, Honda, Jaguar, Kia, Hyundai, Rolls-Royce, and Toyota. So when you take a step back and look at this stock, this is not a time to freak out. Sure, they had the share price drop, but things are looking really good from that Gigafactory standpoint. I know it's going to be a few years out, but that will help with the volume. They want to sell more vehicles at that lower price. That's a smart play. So Tesla investors, you have to think more long-term here. And I really like that utility play. You have other competitors using your product. That's a great place to be. That's actually very hard to do. So I give Tesla a lot of credit for that. Now, jumping back into Tykr, we have seen that dip and the stock has been leveling off. This may be a great opportunity to buy more shares. This is what we call in Tykr a stockpiling opportunity. When the stock falls and there's nothing that's really alarming about the stock, it's still looking good from the long term. It's a great time to add more shares to your portfolio. So this might be a great opportunity for you shareholders out there. Also, if you don't own the stock, this might be an option to consider adding it to your portfolio. Now, I will say this. A shameless plug here on Tykr, but one of the features I really like a lot is the watch list feature. If I were you, I would add this to your watch list. That way, looking back in Tykr here, if that summary changes to watch or overpriced, or that score decreases, or that margin of safety decreases, you get notified. What that tells us is when those numbers, when these ratings start decreasing, that tells us that EPS has been decreasing as well. Profitability of the company is decreasing, and the overall financials are decreasing. And what's going to happen thereafter, what can happen, is large institutions will lose confidence and will start selling shares. And a lot of retail investors like you and I, they're kind of late to the party on this. Those institutions start selling, and then all of a sudden you're like, oh my gosh, I'm losing money here on Tesla. What should I do? Well, in this case, this feature of Tykr allows you to get ahead of it. This data hits Tykr, and then you can start making moves on this stock and start selling. I've done this with other stocks in my portfolio. I add them to my watch list. If something's happening, if it's a sinking ship, I can get off that ship early before I lose money. So just, again, you don't have to use this, but I certainly welcome you to. So on that note, I'd love to hear what you guys have to say about Tesla. Where do you think it's going? And of course, if you like this video, hit that like button. If you want to see more like it, hit that subscribe button. And if you want to join Tykr and start, finding some strong stocks, maybe avoid some weak stocks, and start adding stocks to your watch list. I invite you to join Tykr for free.